So great. Thanks so much, Alex. Thanks for the insight, and thanks for premiering our new Metaverse space, which will go live in Alpha 4 with Sandbox. So next, we have Geoffrey Kendrick. He is one of our FX research analysts who focuses outside of FX, also on crypto. So let's let Geoffrey take it away.
Thanks all. Thanks for the opportunity to speak with you today. As mentioned, my background is in FX research. I also took on the crypto research space around 2 years ago, and we started publishing notes about 12 months ago. So I now run that digital asset research team globally for the bank. So far, we cover roughly the top 30 crypto coins, benchmarks like Bitcoin and Ethereum, of course, alternative smart contract platforms, the so-called Ethereum killers, DeFi protocols, stable coins, the Metaverse, etc. So the uptake has been dramatic, which I guess is where this broader discussion has also started to go today. If we just jump across to the next slide there. So thanks for pulling up the slides there. In terms of the way I view crypto markets, we combine top-down macro drivers, which is where I've spent most of my career, with bottom-up crypto sector and coin-specific inputs. I view the broader crypto landscape as a version of an equity sectoral and stock-specific landscape. So if you fast forward 6 or 12 months from now and you were to look on our crypto research on our website, I'd like to think it kind of starts looking like, let's say, a JP Morgan equity analyst type output, right? So you have the top down, which will be driving things like Bitcoin and Ethereum, and then those bottom up sectoral and sort of stock specific type outputs. I try to give investors a framework in which to analyze opportunities within this industry and specific recommendations. Look, if I don't give recommendations, please hold my feet to the fire today as well. I think today's topic, the Metaverse, lies pretty much right at the edge of what can be defined within the crypto universe. I'll try to give some specific takeaways in terms of how to think about this opportunity set and specifically what to buy and sell now. I'll focus directly on the investment opportunity that the Metaverse presents. Rather than trying to define what the Metaverse is itself, I suspect that would be another half an hour all on its own. To cover that, I will look at firstly the megatech, what megatech is doing in this space, compare that against blockchain-enabled investment opportunities. I'll talk about the big 4 blockchain-enabled social metaverses that have come up so far. Lessons to date, which I think there are quite a few that we can draw, particularly from the decentralized gaming area that Alex was talking about a moment ago. There's still a lot of challenges remaining in this space. It's very early days, and also mention my personal preferences and potential valuation metrics going forward for this space. So we'll just jump across to the next slide. In terms of what is the investment opportunity in the Metaverse? So firstly, obviously megatech companies are doing quite a few things in this space. Both creating their own metaverses and also dominating the VR headset space, I guess unsurprisingly. Facebook's rebranding to Meta last October did nothing for its own share price, but certainly helped the price of the main blockchain-enabled social metaverses, basically by having more eyeballs on the space, if you like. Facebook and now Meta also released Horizon Worlds, a free VR-enabled game to both US and Canadian users at the end of 2021. Microsoft, Google, Disney, Sony have all made some steps in this space. Given the vast sums of money that these megatech companies can and probably will continue to throw at the problem, I've little doubt that a version of a megatech metaverse will become very important in the years ahead. The main question for me and for investors in this space is whether or not end users will accept the fact that megatech-led metaverses will most likely not have the same property rights and potential community voting rights that decentralized Web 3.0 solutions should do. I don't know the answer to that. Certainly, Facebook/Meta has a very good starting position given the number of users on their traditional Web 2.0 platform. But I suspect those property right type issues may come to the fore down the track. Secondly, and where we're going to focus most of our time today on, are those blockchain-enabled metaverses. I'm going to try to distinguish here between those virtual worlds that are more social in terms of interactions rather than gaming related. I know Alex obviously spoke a bit about the gaming space earlier. I realize that distinction is probably a little arbitrary, but I'm going to use some lessons from blockchain-enabled gaming as well to draw conclusions about potentially how social metaverses should be defined and designed going forward. I'll also ignore for now the smart contract platforms themselves, mostly because for now the metaverse-related fees are quite small in terms of percentage of revenues of these platforms, potentially because of the newness of the metaverse space in particular. That could obviously change over time, particularly as metaverses move onto platforms other than Ethereum, which has started obviously already in terms of some moving over to Avalanche and Solana. What I'm going to focus on then are the existing and potential solutions in the blockchain-enabled decentralized world space, as bolded on this slide. I'll call these decentralized social metaverses, if you like. I'll also leave some time at the end for questions, and also any feedback and ideas that people have in this space. I think the point Alex made earlier about reaching out to users is also very, very critical in terms of the research side itself. So if anyone has questions or ideas at the end, please jump in, or feel free to shoot them across to us afterwards. If I then jump across to the next slide, please. These decentralized social metaverses provide the main avenue for crypto-related investment in this space. You can certainly see here on the chart on the top right what Meta's rebranding did for the value of the main tokens in the space in October last year. Extremely important, perhaps, at least for now, that megatech companies are pushing forward in this space in terms of allowing more eyeballs. So for now, it seems that megatech moves into this space are helpful in terms of bringing more eyeballs to the game, rather than creating a problem of market share, which could potentially be the case down the track. Each of the main four metaverses is focused on offering a social experience for users of all kinds, including digital content creators and consumers. Each is also a so-called sandbox game, in that users build the game as they go. They are all cross-genre games that feature an open world environment, massively multiplayer online gameplay, etc. However, all have quite different value propositions, different levels of immersiveness, different degrees of builder functionality, amount of land, etc. So each has taken a slightly different approach to where they think value add can be down the track. Decentraland was the first mover in the space. It can be best described as a 3D VR-enabled version of a game called Second Life, which was out previously. The leap Decentraland took, though, was to have actual property rights, which is the key differentiator in the space, for both real estate and avatars, rather than in Second Life, where the game was owned by Linden Labs. So that's one of the potential main differences between blockchain-enabled and centralized megatech-led projects in the space, and is potentially where blockchain-enabled systems have their quite a lot of their value add benefits medium term. The idea of Decentraland and others that followed is that developers and creators can develop experiences such as virtual shops, art galleries, games, etc., on top of the virtual land that they own. Attractions should encourage non-land owning users who spend money within these worlds on the attractions, essentially trying to create a self-sustaining economy over time. The jury is still out on whether this will work, and the degree of land ownership concentration is potentially posing a problem already, something I'll come back to later on under the challenges section. Also, being the first mover, Decentraland has already moved to the DAO stage, meaning that planned decision making may be challenged. There's, I think, a broader question about how quickly projects should move to that automated DAO space, which again I'll come back to. Sandbox, as Alex was mentioning earlier, is trying to do quite a few things similar to Decentraland, but has taken a slightly different approach. The graphics in the Sandbox are Lego-like, as per established competitors like Minecraft and Roblox. This is less like what the others are doing, but has the advantage of familiarity to those gaming users in Minecraft and Roblox. So perhaps actually is turning out to be a marginal advantage. The Sandbox has also tried to create brand awareness by linking up with established real world brand names. This seems to be working relatively well. There was the example of land next to Snoop Dogg's land in the Sandbox selling for $450,000 last December, suggesting that the creation of it and what economists would call an agglomeration effect has been established in this virtual world. The concept makes a lot of sense in the real world. Land near cities and places of work is more expensive than elsewhere. But to achieve that in a virtual world, I think is quite impressive, given the fact that it takes no time for me to jump from here to here in a virtual reality. Somnium Space is focused mostly on maximizing immersiveness. It's already VR enabled and has the use of full body Tesla suits. Perhaps over time that will mean someone like Somnium Space will be more of a direct competitor with some of the megatech VR enabled worlds, which are potentially in the space of Meta, etc., given their dominance in that immersiveness so far. But we'll have to wait and see. Crypto Voxel, which I've also mentioned here, has focused mostly on art galleries, which comprise about a third of its points of interest. Its success, perhaps over time, will be linked to the broader success of the NFT art market. One thing missing for Crypto Voxels at the moment is its own native token. They had one earlier, but it was discontinued. I suspect if it does come back with another virtual token, another native token itself over time, Crypto Voxels may get some more attention, given that niche offering. I suspect being niche in this space may become quite interesting over time. So either like offering everything and doing it very, very well, or quite niche. So similar to what we see in the real world in terms of how companies tend to perform well. With that, and obviously you can see in those charts there the spike from last October and prices in terms of dollars of land, which obviously linked to the broader crypto asset space. From here on the broader crypto asset space, it is worth mentioning that I am quite constructive. I think that we have probably seen the lows in both Bitcoin and Ethereum. You can make the argument that we've now seen peak Fed pricing, which I think has been hurting broader risk assets. And in the crypto space itself, some other drivers, which was previously miners in the Bitcoin space taking coins and selling them on exchanges, etc., has also mostly come to a close from what it seems. So I would say going forward, the broader crypto winter discussion that has taken place for the bulk of this year may start to fade over time, but it's probably quite early days on that as well. I'll jump across to the next slide. So here on, let's call them challenges and lessons so far. I mean, look, clearly there's a lot of unknowns in this space so far, as Alex was mentioning earlier. Still very, very early days, even by crypto standards. The metaverse is still very, very early. At the most basic level, there's still a debate around what is the best approach to land ownership. Self-imposed land scarcity exists in each of the big four mentioned so far. The positive of land scarcity is that it means that projects can sell land early on in the development of their virtual worlds and therefore generate income. That has been quite helpful in terms of then future raises of cash, which we've seen for the Sandbox in particular over the last year or so. But the negative of this is heavy land concentration. which you can see on the top right with the Gini coefficients for each of the big four. So Decentraland most heavily impacted by land concentration at the moment. The alternative would be to give every user of land, every user of the metaverse, a parcel of land for free. Some smaller projects have done that. Nifty Island is one. The idea then is to incentivize value creation on the land rather than land speculation, but it's still in its testing phase. So an interesting concept, but not proven at this stage. In the real world, obviously, we also have land taxes, which exist pretty much everywhere in one form or other. And that has some impact on land use versus speculation. None of the big four in the metaverse have land taxes. One approach that has been proposed by Star Atlas is something called a Harburg Attacks. In that scenario, landowners value their own land and pay tax on the value that they say the land is worth. And to stop low valuations, land can be bought back at that self-valued level at any time. So there's incentives to get to reasonable sort of fair value measures, if you like, in terms of estimates for land prices, and then tax those. Again, it's only at the concept stage rather than a proven stage so far. In the game Final Fantasy XIV, land became so scarce and therefore expensive, players were incentivized only to care about taking someone else's land, which they could do by logging on constantly, rather than doing anything else in the game. So I think getting this space right is critical to success of metaverses going forward. So much so that I suspect a hybrid model, which allows early land sales to generate that early revenue, which can help in terms of capital raisings as well, is very important. But after that, perhaps land available can be gradually increased in a preordained fashion. That may become the norm down the track. Again, we're in very early days so far. Of the big four, Crypto Voxel is probably the closest to that model right now. Another lesson from the gaming space, I think, can be taken from what happened with Axie Infinity. Their players were so incentivized to play the game that it became a job for many last year. Players could earn SLP tokens by playing the game, and did so in such quantities that the SLP issuance skyrocketed, causing the price to collapse. And then within the game, SLP tokens are used to breed new avatars. And so once the price collapsed, the breeding rates also exploded because the price of breeding collapsed. So hence the price of avatars also collapsed. So it was sort of this self-reinforcing disaster, if you like, within Axie Infinity that played out. To overcome it so far, the owner of Axie made it more difficult to earn SLP, kind of changing some of the rules in the game. So far, that's lowered issuance of that specific coin, but revenue has also collapsed, as you can see in terms of the bottom right chart there from the middle and sort of second half of last year. It's come a lot lower. Getting incentives right, I think, matters a lot in this space, I guess, is the point here. And being flexible when problems arise may mean that disasters can be averted. So far, Axie will have to see how it plays out in its space. Speed to adapt may be more difficult once the DAO phase is reached as well, which is potentially a problem for the likes of Decentraland. So I think in terms of thinking about where investors should be considering, having some flexibility in decision making in this very early space, I think, is very, very important. And getting that land scarcity and potential for incentives within the worlds, and therefore the hopefully self-sustaining economics of worlds right, is critical. I think there are a number of other considerations linked to the infancy of this industry. While Decentraland and the Sandbox have reaped the brand recognition as